Hey guys, per usual, everything on this channel is for entertainment purposes only and is not intended as financial advice. So the ETF got denied today. That's no surprise to most people, I think. Basically from a regulatory aspect, Bitcoin's kind of a nightmare and Bitcoin doesn't need the ETF. Had some trades recently. These three weren't supposed to be shared, but they were, so sorry if you got trampled in those. As you can see, my sizes for these weren't large. This was the ETF decision trading, and basically what happened was they got opened super late and closed super late based on entry and stop. Nothing I could have done other than had a lower stop, I think. So you can see I didn't risk much. I didn't lose much. So there's that. I had this trade earlier today, which I'll talk about, which was pretty interesting, for 54%. So it was closed in about 12 minutes, and that was kind of dumb luck that it went off that fast, but I'll show you why I opened it. And then this trade from the other day, I will talk about as well, based on the 3 drives pattern, which I didn't think was going to work out, but I was sure enough to have a nice position size and share the trade. It just made sense based on the harmonic and the fact that we had dropped that far down and were growing in divergence. So that's one broker. They're not the best exchange, but they're one of the few that can use leverage as an American trader. Brave New Coin article, I'm going to talk a lot about this in this video, so I'd suggest reading it. So this is a 3 drives trade. I was saying 3 drives is a leading indicator in 2 ways. So you can draw it out like this even before it's completed, and then you can draw it out after you think it's completed, and then again measure the target up based on the bottom. So you just, if this was the bottom, you'd move the fib down lower, is all I'm trying to say. And this was a big tell, the descending volume profile. Anytime you see this, it's sort of a consolidation, exhaustion sort of scenario. When we're going down, it's an exhaustion scenario. When we're sideways, it's a get ready, something's going to happen scenario. It's really good to see a descending volume profile in any chart pattern. And things like Bollinger Bands, anytime you're tightening, are going sideways. So this one actually worked out beautifully. I kept moving the stop $10 up because I didn't want shenanigans to happen and throw out 50% trade. So I got stopped out before the shenanigans happened, which was bullish shenanigans today. So this is why I opened that trade this morning. Basically, I saw this yesterday, and then when I woke up this morning, I saw it was breaking out of the cloud on Bitstamp on the hourly. So I opened the trade, and most importantly, I put an exit on the trade. And sometimes I put exits like $200-300 up. Sometimes I just choose the target, but I always put an exit. I see a lot of people who don't put an exit. The reason you always put an exit is because sometimes crazy crap can happen, like today, and I'll get to why I think it happened like that. But it closed out in 12 minutes, and I would have lost all of that had I not had a close set on that. So that's this pattern, and again, chart patterns playing out. The other thing I noticed, the TK cross happened, so the shorts should have been closed. Again, descending volume profile with a inverted head and shoulders. That's what you want to see with any head and shoulders. I talk about this stuff all the time, especially head and shoulders. It's always best to see head and shoulders with the descending volume profile. And this isn't even a perfect descending volume profile, but it's convincing enough to me that it's there. On Stamp, it looked kind of sad, but the shoulders aren't greatly formed as far as, very distinct as you might want to see. So this shows you that patterns can happen even though everything's not perfect. It certainly lowers the probability, but I think the probability of completion to the target. But this, again, was good enough for me to say, I'm going to open a trade and see what happens. Not enough to make it a shared trade, unfortunately, but it is what it is. So that, this is the after effect. On the index, it didn't break out of the cloud until the big candle happened, but on Stamp, what I was seeing, it did break out basically when I opened the trade. So I used cloud and chart pattern there and volume profile to make that decision. So here was the pitchfork. Again, this looks better depending on which exchange you look at it, but on the index, this was the no, this was the yes, and this isn't rocket science. I just added a pitchfork. Part of this is buy the rumor, sell the news. Even with a yes, I really don't think it would have gone up insanely high. Probably would have been bullish over bearish I don't know. It's not even worth talking about, honestly, because who knows? But, a no is clearly not a great thing for price today. But we did make a new all-time high, which I didn't really see anybody talking about. So there's that. This is the all-time high. So we didn't quite hit the buy zone here. And again, why were my bids the way they were, the stops the way they were? I don't know. They were honestly old. I forgot they were even shared. But anyways, it is what it is. So we almost hit both zones today, which is pretty interesting. But again, you can predict this before it happens. I'm thinking what's going through my head, big news event. We're basically at the median line. So it's kind of 50-50, or was 50-50 as far as direction's concerned before today, just based on technicals. And then cloud, like I talked about in the article again, price was super far away from the Tenkin line. Anytime you see that, like here, you can measure these. And this was just a growing, and this is basically a 20 moving average, 20 period moving average. And you can see here, all this is what you want to see with a healthy trend. Then things start to get nuts. Now that isn't to say you can't trade any of this, it's just to say be careful the farther and faster this starts going, because one, you don't know where it's going to go, which is good because it's bullish, but two, you don't know where it's going to go, which could flip bearish. Now obviously this was PBOC, but like I've already talked about, PBOC lined up technically with the announcement lined up technically with this being just overbought, period. And this was overbought for days before the announcement. So whether or not this was some insiders, I doubt it, but who knows? It's possible. And then according to the index, this was the target at basically 1010. And it came pretty close to that, 1030, 1040, something like that on index. So again, the Tenkin line, I'm always telling you, bids 10 plus or minus $10. It wouldn't have hit the Tenkin here, but excuse me, Kijun. The red line's the Kijun. It wouldn't have hit here, but that's why I tried to scatter my bids. I actually had a bid somewhere in the 960s too, but it didn't even go down that far, so it doesn't matter. It might have on stamp. Here's how it looked on 4 hour. Again, I'm using the daily Kijun as a target. After the Kuma breakout occurs, this is the direction, the intensity you'd expect based on the daily Kijun, and it got pretty close, 1030, something like that. So that's all stuff that already happened. Now this brings us to the live 15-minute chart. What happened today doesn't change anything as far as how to play this technically. It's always the same story. Fib it out first. It's your decision whether you want to start from this candle or this top and go down. Whatever you want to do. Basically, you can expect it to hit the 50% fib, which again, there's some confluence here with previous, just sideways kind of, the inverted head and shoulders here. And you can expect it to hit 50% because it's Dow theory. Google it. It's filling the gap. You can Google that. Once the bottom is firmly established, this is kind of a W bottom. Let's see if this will look good on the 5 minute. So this is what the 5 minute looks like. I don't know, kind of atrocious. It is what it is. I'm going to stay out of this certainly until probably Monday. Basically what I'm looking for is something on the 4 hour. It can go sideways and just hug the cloud and pop up through here on the 4 hour. That's kind of what I'm expecting. There's a really thin resistance strip here in the cloud, so that says to me anyway that that's the highest probability of breaking the cloud resistance. Now should it close in the cloud on the 4 hour, which it might be starting to try to at this point, again that would be an edge-to-edge trade like I talked about in the article here. The edge-to-edge trade starts here when the candle closes, so you can see there's not a huge payoff here, but that's why I put bids in this area. Again, that matched up with the 3 drives bottom that you could predict 30 periods ahead because the cloud had already drawn this before the candles got there. So the down move happened, that's great. But really what was interesting was this today. You don't see this too often. I initially thought it was because of ETF stuff, but upon further inspection, it appears to be related to the non-farm payroll U.S. job numbers. Somehow, this has happened before in the past. It doesn't always happen, but if we look at the Dixie, which is the dollar index, we can see we dumped at 8:30 exactly. I think that's when the announcement happened, and this is sort of ramping up and dumped on 8:29, 8:26, 8:27, something like that. So that's pretty coincidental that all that happened at the same time, connected to the announcement of NFP. So I didn't even realize NFP was today, to add on to the insane volatility that was possible. That's pretty interesting. So that's all I have for today, guys. Just sit out, watch it on the 4-hour, wait for it to go green on the cloud. Bitcoin protocol is unaffected. This was a smaller dump than any of the PBOC announcements, I think, unless it was like 25%. What was this? 25%. Okay. So it's smaller than the biggest PBOC announcement, that's for sure. Really not a big deal. I don't think it'll keep going. There's no reason for it to other than just blind selling. But again, we hit a new high today, so there's that. Thanks, NFP. Hit me up in the comments, Twitter, Telegram. If you ask me about a chart, always send me the chart, because sometimes I'm on mobile and I can't pull up TradingView right away. So sometimes people are like, what do you think about blah, blah, blah? And I'm like, I don't know. I can't pull up the chart that easily. So just send me the chart whenever you're asking me questions about anything. And happy trading.